Hey, what's going on, guys? Neil here, bringing you a brand new video. In this video, I wanted to bring you guys the breaking news right now that just broke. Payrolls increased by 517,000 in January, much better than the expected 187,000 expected. The employment picture started off 2023 on a stunningly strong note, with non-farm payrolls posting their strongest gain since July 2022. Non-farm payrolls increased by 517,000 for January, above the Dow Jones estimate of 187,000. Unemployment rate also fell to 3.4% versus the estimate for 3.6%. So Treasury yields also early this morning rose Friday after jobs data came in much better than expected. The 10-year Treasury yield was up about 6 basis points at 3.345%, and the 2-year Treasury was up around 8 basis points to 3.471%. Yields and prices move in opposite directions, and one basis point equals 0.01%. So we talked about the payroll here, and let's talk about the Fed here. So Fed has been trying to cool the economy through the monetary policy measures, including interest rate hikes. At the conclusion of its latest meeting on Wednesday, the central bank increased rates by 25 points, but also said it was starting to see a significant slight slowdown of inflation. So if inflation can slow and the rate hikes can kind of calm down like they are right now, it's going to be great for the economy, and maybe we can push out of a recession here and back into a bull market. So a lot of earnings happened yesterday. So these are stocks that are making the move before the bell. Apple, Alphabet, Amazon, Starbucks, right? Alphabet shares declined more than 3% after Google's parent Alphabet missed analyst expectations in its latest earnings report. Alphabet earned 1.05 per share, lower than expected earnings of 1.18. So Google was down on earnings. And revenue is also less than forecasted as well. Apple also fell about 2% pre-market, missing expectation. Amazon dropped about 4% after reporting its fourth quarter results. The revenue fell between 121 billion and 126 billion. Analysts were expecting sales to come in at 125.1 billion. Ford shares also slipped 6.5%. Starbucks shares slipped 2%. Nordstrom shares rallied 27% after Wall Street Journal reported that activist investor Ryan Cohen is building a sizable stake in the retailer. So that's interesting. It's a massive spike just based on that news. Clorox saw a share price increase. They went from 98 cents per share on a revenue of 172 billion. The company that compares to earnings of 65 cents per share of 166 billion estimated by analysts. So they really crushed their earnings compared to analysts. Definitely keep an eye on all these stocks if you're trying to be trading them, and maybe if you like any of these stocks long term, like Apple, Amazon, Ford, Starbucks. These are all large cap stocks. If you like any of these stocks, maybe consider buying them on the dip right now. Obviously, this is not financial advice. Do your own research. Let's take a look at the S&P here. We can see S&P topped out in the beginning of January 2022. So about a year ago, a little over a year ago, we topped out at about 480. Then we came back down all the way to about 350. So a massive drop off here into October. And now we've had a huge rally at the beginning of the year here in January. We've seen the S&P go from 377 all the way up to where we are now, which is about 412 in the pre-market. So it's definitely going to be interesting to see if we can maybe break above this resistance here at 430. I think that would be clear skies potentially into another move higher, push to maybe 450. But if we see the break of support here below at 390, I think that's going to be a big flush down to potentially back to, where the support is around 360, 350 area. So it's an interesting time, and I hope you guys have a strategy when it comes to investing. If you guys want to check out my other videos, definitely click on the screen right now and like, comment, and subscribe. Hope you guys have a great rest of your day. Thanks.